Workers at banking giant Goldman Sachs earn a whopping £275 each on average. London-based staff were among those pocketing windfalls, with many picking up bumper bonuses. Thousands of workers at banking giant Goldman Sachs pocketed an average of £275,000 each last year. London-based staff were among those pocketing windfalls, with many picking up bumper bonuses. Wall Street heavyweight Goldman branded a great vampire squid wrapped around the face of humanity by Rolling Stone magazine in the aftermath of the financial crisis, announced it raked in £25 billion of revenue last year. Accounts showed it dished out £9.4 billion in compensation, salaries and bonuses, dwarfing the £6 billion it made in profit. Many staff were told the size of the bonuses. The £275,000 average is across Goldman's 34,400 global workforce. However, staff, including top traders and senior managers, got considerably more than that, including among its 6,000 UK workers. Two bankers closely linked to shamed tycoon Sir Philip Green are believed to have been among those pocketing bumper windfalls. Reports said Goldman Sachs veteran Michael Sherwood, who was quizzed by MPs over the bank's advice to Sir Philip Green in the sale of BHS, could top last year's near £17 million bonus. Fellow Goldman kingpin Anthony Gutman, who also gave evidence to the BHS probe, could be in line for a multi-million reward for helping broker Japanese firm SoftBank's £24 billion takeover of British microchip giant Arm Holdings. Christina McCania, head of health at Unison, said, "Nurses, midwives and other NHS employees have had to live with years of freezes and caps on their earnings, all because reckless lending by the banks caused the crash, which made the government severely restrict health workers' pay. It's long been back to business as usual in the city. Not so for the dedicated staff keeping the NHS afloat today and every day. Nearly 10 years on from the global downturn, they're unfairly still taking a hit to their wages. That's meant staff shortages, with today's patients paying the price. Elsewhere, Deutsche Bank's top earners will have their bonuses slashed as the lender grapples with a hefty fine from the United States and the financial fallout of low interest rates. In a letter to staff, Chief Executive John Cryan said, "Tough measures are unavoidable, as it moves to shore up performance and pay a £5.8 billion settlement with American authorities following a probe into its sale of mortgage-backed securities during the financial crisis. The move means around 25,000 of the bank's 100,000 staff, including workers in London, will face a sharp cut to their pay awards. However, around 75% of its workforce will suffer little and